Okay, let's go live. Let's bring the noise down so I don't get struck by the YouTube algorithm. But we are live. We are live for Tattooed Chef's Q1 earnings call. Let me get the word out. Let's have a look. Let's have a look. We are live, ladies and gents. Are we live? Mic check, mic check. I think we are live. Yes, I believe we are live. Right, let's get the word out. Let's get the word out that we are live. If you guys can hear me, just type in the chat, say hello. So I know. Okay, Lucas. Yep, Lucas, David Ramos. Yep, DJ M. Okay, we are all good. You guys can hear me loud and clear. So we have welcome to Q1 2021 for Tattooed Chef. I'm excited. So all good. But we've got 51 million in revenue. Yes. I haven't been through it just yet. But yeah, branded sales increased 105% to a record 36 million. 36 million in just branded sales alone. Wow. Wow. That's brilliant. Where are we at? So the earnings call, the call is going to start in the next 9 minutes, I believe. It's going to start in the next 9 minutes. But we can have a flick through. So we're being reported as we missed by 11 cents, but we beat on revenue. Okay, so misses by 11 cents. Revenue was 52.68 milli. Wow, that's brilliant. Beats by 6.28 million. And in terms of after hours, not doing too bad. But yeah, we missed on earnings per share just. But this is a good result, I think. I need to read through this. Why operator? So let's have a look. Let's see what you guys are saying in the chat. Let me double check that it hasn't started. So yeah, the call is going to start in the next 8 minutes. Okay, in the next 8 minutes. Okay, so our record start to the year demonstrates the strength of our business and Tattoo Chef brand. Sam Galetti speaking. Branded revenue increased 105% in the first quarter across the mass, club, and grocery channels, driven by successful product launches, increased distribution, and a promotion at a large club chain. Okay, so this is all good news. We're executing on our growth strategy to increase distribution, build brand awareness, expand manufacturing capabilities, and diversify our product portfolio through innovation. And this is very true. I mean, we've seen quite a number of products roll out within the first quarter. So we are investing in the business today in order to support strong long-term growth. And we believe the recently announced strategic acquisition of Foods of New Mexico. Oh yeah, remember that? Where we got a great deal. What was it? 35 million, and that's going to produce 100 million in the next couple of years. So we'll help create meaningful shareholder value going forward. So this is a great opening statement from Sam Galetti. Let me let the Discord know that we are live. What do you guys think? How did you guys think of the results? What did you make of it? But let me put the message out that we are live. I think so far, I mean, branded sales absolutely smashed it. 36 million alone in just branded sales. Unreal. I said we're going to smash our guidance this year. We're going to smash it. But let me get the word out. So we are live. It's going to be a good call. I'm very excited. So Tattoo Chef Q1 earnings call. We are live. Let's get the word out. Everyone. I'm excited. I am pumped, guys. Let's go. Let's go. Okay, so yeah, the earnings call is going to start in 5 minutes, guys. Okay, 5 minutes. But we are currently just working our way through the reports. Okay, I think branded sales, guys, look at that. Branded sales increased to a record $36 million, 105% year over year. Insane, insane. That's all I have to say. Absolutely insane. Sorry, guys, I'm just putting it out that we are live. But yeah, let me see what you guys are saying. Okay, so why so much operating expenses? Remember, David, we made an acquisition in this quarter, and also we also launched I believe it was like 6 more products in this quarter. So those are all operational costs, um so there's no surprise there. With you find that's quite common within growth companies. The operation expenses is quite high. We saw the same in Palantir yesterday. Operations was quite high. Again, this is all part of the expansion process. Amazon as well. Very early on, Amazon was spending on R&D, spending on sales and marketing, and this is what you expect to see in high growth companies. Okay, high growth companies. So that's I mean, we'll get through it. We'll get through it. So we've got a statement from Sarah Galetti. We are live. But I'm excited to have these guys on my channel after earnings. Can you imagine? I'm gonna need your help, guys. I'm gonna need your help in terms of what questions you would like me to ask Sam Galetti. So it's still music at the moment. And so far, I mean, after hours, we're not doing too bad. We are not doing too bad. Word out a bit more. We are live, and then we'll get cracking. But yeah, okay. So we've got Jose said, "What do you expect in Tattoo Chef share price after this announcement?" I think David Ramos said it clearly. It will drop. I think it's going to drop. I mean, Jose, if you've been paying attention to the markets as of late, high growth companies are getting, especially high growth tech stocks, are getting destroyed in this market. Tattoo Chef is a high growth company, and the fact that we did miss a bit is we need to beat in, even if we beat in 3, even if we beat in revenue, we beat in earnings per share, and we beat in guidance, we're still seeing companies get destroyed. Okay, so the fact that we beat on revenue, quite significantly beat on revenue, we didn't quite beat on earnings per share. And I mean, I would not be surprised if this goes lower personally. But let's crack on with the outlook. Okay, so Sarah Galetti, CEO and Tattoo Chef, added, "We are revolutionizing plant-based eating with the Tattoo Chef brand by tapping into our consumer preferences and constantly bringing new ideas to market." Okay, it's still not live yet, which of course we've seen them do that in abundance this Q1. Our recent product launches in retail have been very successful with the addition of our new manufacturing capabilities. With the Foods of New Mexico acquisition, we have a pipeline of over 250 plant-based innovative ideas, including ambient products and snacks. And I think that acquisition came as a massive surprise, and I think that's going to add even more to our top line in terms of the food service part of the business, which I'm extremely excited for. I'm going to be okay. So it's still music at the moment, guys. Right. So let's have a look at the financial highlights. So revenue was $52.7 million, which is a 59% increase compared to 30. That's crazy. That's really, really good. 33.2 million in the prior year period. Massive growth, guys. We're growing at 59% year over year. Really, really impressive. Tattoo Chef branded products revenue was a record $36 million. I can't get my mind around that. That's crazy. An increase of 105% compared to 17.6 million in the prior year period. So top line growth, incredible. Okay, gross profit was $13.7 million or 26% gross margin. It's very good gross margin compared to $9.2 million or a 28% gross margin in the prior year period. So net loss was 7.9 million compared to a net income of 5.9 million in the prior year period. And I think this is where, you know, people might see this as a negative. You know, in this current market, you know, it's brutal. It's absolutely brutal right now. And that's going to be a big point where people, I think, might sell. But remember, we had that acquisition out of nowhere, which cost 35 million. And we're going to look at the financial results in much depth, much detail. Okay, and we are live, guys. We are live. Thank you for your patience. Oh. Okay, so I guess they're not ready yet. Have you noticed the last quarter as well? They were a bit late, weren't they? Right. Let's catch up with you guys in the comment section right now. Let's see where we're at. Okay. Okay. What do you think about the stock-based compensation? I need to look into that. I know that was a big deal for Palantir yesterday, but I will need to look into stock-based compensation. I don't think we've got there just yet. Great growth, in fact. Yep, Lucas, great growth in my opinion, especially from a branded sales point of view. Incredible growth. Henrik, hey, welcome, brother. Welcome. Norm, welcome, brother. This is more entertaining than Chelsea versus the guy. Facts. Oshin, welcome. Worry only about revenue. Good point. Oshin there. We've got Schwan. I'm curious to know how quickly they incorporate the new acquisition. Same here. That's a good point. And I think what I would do, Schwan, I will write that down, because remember, hopefully we're getting a member of the board on the channel. Okay, I think we're live now. Okay, we're not live yet. Why are they always late? Like in the Q4 as well, they were late by like 5 minutes, weren't they? This is Nigerian timing. Okay, yeah. So Sean, I'm curious as well. How quickly are we going to incorporate the acquisition and bring in the food service arm to the business? So that's a great question. But yeah, guys, leave your questions in the comment section with regards to what you want me to ask whoever we get on the channel from TTCF. So yeah, food service incorporation. So that's a good question there. I'm going to make a note of that. Okay. So Lucas said, I have liked to see them improve guidance rather than reiterate. I think they're still being a bit. Yeah, I think so. Okay, here we go. Welcome to Tattooed Chef's first quarter 2021 earnings conference call. As a reminder, all participants are in listen-only mode, and the conference is being recorded. After the presentation, there will be an opportunity to ask questions. To join the question queue, you may press star then 1 on your telephone keypad. Should you need assistance during the conference call, you may signal an operator by pressing star and 0. I would now like to turn the conference over to Rachel Perkins, Investor Relations. Please go ahead.
Thank you. Good afternoon, and welcome to Tattooed Chef's first quarter 2021 earnings conference call. On the call today are Sam Galletti, President and Chief Executive Officer, Sarah Galletti, Chief Creative Officer and Meet Tattooed Chef, and Stephanie Dykman, Chief Operating Officer and Chief Financial Officer. Matt Williams, Tattooed Chef's Chief Growth Officer, will also be available for questions. By now, everyone should have access to the earnings release, which went out at approximately 4:05 p.m. Eastern Time today. If you've not had a chance to review the release, it's available on the investors portion of our website at www.tattooedchef.com. Before we begin, I'd like to remind everyone that the prepared remarks contain forward-looking statements. Such statements involve a number of known and unknown uncertainties, many of which are outside the company's control and can cause future results, performance, or achievements to differ significantly from the results, performance, or achievements expressed or implied by such forward-looking statements. Important factors and risks that could cause or contribute to such differences are detailed in the company's filings with the Securities and Exchange Commission. Except as required by law, the company undertakes no obligation to update any forward-looking or other statements herein, whether as a result of new information, future events, or otherwise. In addition, within our earnings release and in today's prepared remarks, adjusted EBITDA and adjusted EBITDA margin are referenced. important to note that these are non-GAAP financial measures that we believe are useful metrics that better reflect the performance of our business on an ongoing basis. A reconciliation of these non-GAAP financial measures to their most directly comparable GAAP financial measures are included in today's press release, which has also been posted on our website. And with that, it is my pleasure to turn the call over to Tattooed Chef's President and CEO, Sam Galletti.
Thank you, Rachel, and good afternoon. We appreciate everyone taking the time to join us on today's call. It's an exciting time at Tattooed Chef. I'll begin today's discussion with key business highlights, new distribution wins, and our recent acquisition of Foods in New Mexico. Then, Sarah will discuss our marketing and innovation, and Stephanie will provide further detail on the financials. We are off to a great start to 2021. First quarter revenue increased 59% to $53 million compared to the first quarter last year, driven by our Tattooed Chef branded products. Our branded product sales for the first quarter of 2021 were a record $36 million, or 69% of total revenue. That's an increase of 105% compared to $18 million in the first quarter last year. We had originally anticipated it would take 2 to 3 years to reach 75 to 80% branded sales, and we are proud that we are nearing that goal within 6 months of being public. When we launched the brand in 2017, we recognized an opportunity to revolutionize the way consumers think about plant-based food. The Tattooed Chef brand is for everyone, and we attract consumers of all ages and demographics. It really resonates with both consumers and retailers, and that has been apparent through our sales velocities and product launches to date. The club channel requires much higher volume to stay on shelf compared to conventional retail, and we continue to exceed retailer expectation. This gives us confidence as we enter new channels like grocery and meet the sales thresholds. Our portfolio of products, from single-serve bowls to vegetable blends to plant-based pizzas, offers retailers a variety of breakfast, lunch, dinner, or snacking products. With our acquisition of New Mexico Food Distributors, Inc. and Karsten Tortilla Factory, LLC, collectively referred to as Foods in New Mexico, we plan to expand further into the $20 billion Hispanic Southwest food sector and beyond. We acquired Foods in New Mexico for $35 million in cash and are incredibly excited about the growth opportunity. We'll be immediately addressing the $1 billion frozen Mexican food category, and we'll also be launching our first ever refrigerated and ambient products. We believe the Mexican food space is lacking alternative plant-based options, and this is exactly the type of acquisition we were looking for. The two facilities total 118,000 square feet, allowing us not only expand production capacity, but also diversify our manufacturing capabilities and grow our product portfolio at an accelerated rate. The Karsten facility is brand new with extensive tortilla manufacturing capabilities, and since it was never completed, we now have the ability to customize and tailor the existing footprint to our needs. Given our business is vertically integrated already, we're very comfortable manufacturing and plan to introduce more innovative products like alternative tortillas and plant-based items. In 2 to 3 years, we believe Foods in New Mexico can contribute up to $200 million in revenue annually. The focus going forward will continue to be on Tattooed Chef branded plant-based products. We continue to successfully execute on our growth strategy to grow the Tattooed Chef brand in the categories in which we compete. At the end of 2020, branded products were nearly in 4,300 stores and had 23,000 points of distribution. And at the end of Q1, we were at 6,065 stores with 31,000 points of distribution. By the end of Q2, we expect to be an additional 1,162 stores with 8,000 new points of distribution, including a number of larger grocery chains, which we'll expand upon in the moment. Our new total store count by the end of the second quarter is 7,477 stores and 40,275 points of distribution. Based on where we are today and additional retailer commitments that we will realize in the back half of 2021, We are confident we can achieve our 2021 objective of 10,000 stores and 65,000 points of distribution for Tattooed Chef by year end. In the club channel, we saw exceptional growth. Our Costco MBM in March with acai bowls was very successful. The acai bowl was featured on the end cap and placed in their ad that is mailed to each member for a 4-week promotion. This gives the Tattooed Chef brand exposure to over 105 million Costco members across the country. In Sam's Club, we had 4 limited time offers in Q1 in addition to our 4 everyday items. In Q2, we have limited time offers including tempura green beans with vegan wasabi ranch and our rice cauliflower burrito blend. According to Spins, for the latest 12 weeks ending March 21, 2021, Tattooed Chef continues to experience double-digit growth, up 10.8% in Sam's Club, significantly outpacing the frozen categories we compete in. For the 52 weeks ending March 21, 2021, Tattooed Chef was up 128% and is one of the fastest growing brands in the frozen category. In the mass channel, latest 12 weeks through March 21, 2021, we saw a 477% growth, primarily driven by our launch of 6 new bowls at Target in mid-March. Our average ACV in the channel is 57.1 and has grown 5 times since the same time last year. We continue to see TDPs increase in the mass channel, which are up over 800% versus the same time last year. Our launch in Target exceeded both ours and Target's expectations. We saw extraordinary demand for the Tattooed Chef Entree Bowl line and beat our launch plan velocity expectations. Since launch, the Tattooed Chef Entree Bowl line is averaging over $32 per SKU per store. Target said it was the most successful frozen food launch in the history of Target, and collectively we have exciting plans to continue to drive trial and sales with the Target guest. Last 52 weeks, we have grown 149% in mass channel, and we expect this momentum to continue as our products are introduced to consumers throughout the year. In the grocery and natural channel, we continue to gain distribution with both national and regional retailers in the U.S. In addition to our distribution wins in Q1, we announced in March, by the end of Q2, Tattooed Chef products will be on shelf at Whole Foods, Harris Teeter, Jewel, Smart & Final, and Nugget Markets in NorCal, as well as a growing list of independent retailers. And in Q3, we already have commitments from multiple Albertsons divisions, including Southwest, SoCal, NorCal, and Intermountain, as well as H-E-B, Price Chopper, and Sprouts Farmers Market. Additionally, we are also seeing our early retailers expand our line into additional categories based on the success of the brand, which will increase the breadth of our distribution. We have strong momentum and expect our growth to continue given the white space opportunities with new and existing customers in grocery, club, mass, as well as our innovation pipeline and recent acquisition. In 2021, we expect revenue between $235 to $242 million, which Stephanie will expand upon in a few minutes. In 2022, we now expect at least $300 million in revenue based on our distribution success in grocery this year and our innovation pipeline, including the launch of our first ambient products, which we expect at the end of this year or early next year. We are building Tattooed Chef to be a generational brand. It is important we invest back into the business now to lay the foundation for future success. As we previously announced, we have partnered with NitroC, National Marketing Agency, and are spending $15 million this year to increase Tattooed Chef brand awareness. Sarah will provide more details momentarily, but we are pleased with our early success and launch of our first commercial last month. Regarding production capacity, we are ramping up production and increasing capacity in both our facilities in California and Italy in order to meet our guidance and sales volume. The acquisition of Foods in New Mexico now adds another 2 facilities, giving us a total of over 275,000 square feet. And now I'd like to turn the call over to Sarah to discuss our innovation and our marketing efforts.
Thank you and good afternoon, everyone. Tattooed Chef is a brand committed to creating high-quality, delicious plant-based meals that connect with the next generation of consumers. Innovation is woven into the culture of our company, and we are passionate about every product we make. We create food we want to eat, and as consumers' preferences change, so do ours. Plant-based food does not have to be boring, and with Tattooed Chef, it's not. Our food is exciting, no longer for the 1%, and it's chef-created. At the end of Q1, we had a total of 42 Tattooed Chef branded SKUs, and by the end of Q2, we'll have 54. This includes 5 new 20-ounce plant-based multi-serve meals: cauliflower spaghetti with plant-based bolognese, sweet potato gnocchi with plant-based butter and sage, cauliflower gnocchi quattro formaggi, chickpea pasta with plant-based sausage ragu, and rice cauliflower burrito blends that are now available for purchase at Target stores nationwide. These skillet meals feature a variety of our innovative plant-based alternatives with plant-based beef and sausage, plant-based butter, and alternative rice and pasta. These multi-serve meals are different yet familiar to consumers. They are truly a nostalgic innovation. We created our own pasta alternatives that we believe are better than anything else on the market today. Following our 6 bowls launched in Target in March, we also recently launched our new Pesto Harvest Bowl and a plant-based egg roll bowl, as well as a 4-pack of cauliflower mac and cheese and our plant-based burrito bowls at Target. This brings our total SKUs offered at Target to 17. Our plant-based pizzas launched in mid-April exclusively at Meijer stores and are gaining distribution in other retailers, including United Supermarkets, Jewel, and H-E-B in Q2. We are continually bringing new ideas to the marketplace, and with our acquisition of Foods of New Mexico, we have a pipeline of over 250 ideas for innovation, including over 50 in the Hispanic Southwest food category. As Sam mentioned, beginning in January, we kicked off our marketing efforts with the help of Nitro C to increase our brand awareness as we grow our distribution. This year, we are investing $15 million across digital video, connected TV, digital display, social media, and search engine marketing. On April 5th, we debuted our first 6 and 15-second commercials of animated ingredients with live motion cinematography of some of our top-selling products. The commercials are now airing on a curated list of cable networks, including Bravo, Food Network, CNN, and CNBC, as well as connected TV and digital media. We allocated a larger spend to be on cable networks and now have placements on some of the biggest shows. By the end of the 16th week campaign, we expect the commercials to reach over 80 million people seeking more plant-based eating options. We are in the early innings of marketing and are excited to make Tattooed Chef a household name. Now I'll turn it over to Stephanie to walk through our financials.
Dad?
Thank you, Sarah, and good afternoon, everyone. In the first quarter of 2021, we continued on our growth trajectory. Revenue increased 58.8% to $52.7 million, compared to $33.2 million for the prior year period. As Sam mentioned, the revenue increase was driven by an $18.4 million increase in revenue of Tattooed Chef branded products. This now accounts for 69% of our total revenue. Gross profit in the first quarter was $13.7 million, or 26% of revenue, compared to $9.2 million, or 27.9% for the prior year period. While gross margin declined year over year in the first quarter, we anticipate quarterly gross margin expansion throughout the rest of 2021 as we increase our volume. On a sequential basis, first quarter gross margin increased 860 basis points compared to 17.4% in the fourth quarter of 2020 due to operational efficiencies. Per our full year 2021 guidance, we expect gross margin between 20 to 25% for the year. Operating expenses increased to $20.7 million in the first quarter of 2021 compared to $2.4 million in the prior year period. The increase in operating expenses was primarily due to $3.2 million of stock compensation, $2.6 million in marketing, $2.6 million in public company and new employee costs, and $1.9 million in promotional expenses to invest in customers and the brands through promotional offers. During 2020 and into 2021, we have invested more in our management team, infrastructure, equipment, and maintenance to support both the production facilities here and in Italy during our rapid growth that is expected to continue moving forward. We have also made significant investments with our customers in the form of promotion and marketing that we believe will benefit Tattooed Chef in years to come. We expect operating expenses to increase in 2021 to accommodate branded growth, invest in the Tattooed Chef brand, and incur a full year of public company costs. Due to the increase in operating expenses, net loss was $7.9 million in the first quarter of 2021 compared to net income of $5.9 million in the prior year period. Adjusted EBITDA loss was $3 million in the first quarter of 2021 compared to adjusted EBITDA of $7 million in the prior year period. The decline was primarily due to the operating expenses that were previously mentioned, and we expect adjusted EBITDA to increase sequentially throughout the remainder of the year. As of March 31, 2021, we had cash and cash equivalents of $185 million. Now turning to our outlook, we are reiterating our full year 2021 guidance provided in our recent M&A release, which includes revenue in the range of $235 million to $242 million, an increase of 58 to 63% compared to 2020. This guidance implies 49% year-over-year growth on the base business to $222 million and 13 to 20 million contribution from one of the two facilities in the Foods of New Mexico acquisition. This revenue guidance excludes any revenue contribution from the second facility that we refer to as Karsten because it is not currently in operation. We expect to update guidance again once production begins at that facility in the coming months. We expect gross margin to be in the range of 20 to 25% as we increase scale and leverage operational efficiencies in our California and Italy facilities and integrate Foods of New Mexico. We expect adjusted EBITDA in the range of $2 million to $4 million as we continue to invest in and promote the Tattooed Chef brand. We invest in people, labor, equipment, and public company costs. Despite inflationary pressures, we expect sequential improvement in adjusted EBITDA as we progress throughout the year. Lastly, we expect capital expenditures in the range of 15 to 20 million. With that, we are now available to take your questions. Operator?
Thank you. We will now begin the question and answer session. To join the question queue, you may press star then 1 on your telephone keypad. You will hear a tone acknowledging your request. If you're using a speakerphone, please pick up your handset before pressing any keys. To withdraw your question, please press star then 2. We'll pause for a moment as callers join the queue. The first question comes from George Kelly of Roth Capital Partners. Please go ahead.
Hi, everyone. Thanks for taking my questions. So I have a few for you. I'll start with the New Mexico acquisitions that you just made. So I was curious if you could help us understand the progression. You gave the 2 to 3 year targets of, I forget exactly, a couple $100 million. And so I was just curious if you could help us understand that progression, and when you're going to start introducing your own branded items to that facility. And then the second part of the question is just about sizing the opportunity in tortillas. How big is that market? What's the penetration with alternative kind of plant-based products, etc.?
Thank you, George. This is Sam. So the first part is the way that we're looking at this is that the immediate opportunity obviously is with plant-based burritos, enchiladas, quesadillas. The facility is live, it's running, and tortillas are being manufactured today within the facility also. So the immediate opportunity, and if we're fortunate and we could get some distribution quickly, will be, third or most likely fourth quarter. I could see frozen food products being the first items that we hit the market with our Tattooed Chef brand, and they could end up being, Sarah's looking at a full line of entrees also to be able to increase the retail area that our entree bowls are going in. So there's tons of opportunity that is pretty immediate. It's a function of just really getting all the pieces of the items and packaging and production in place. But I think that within 4 or 5 months, we definitely could be hopefully getting some distribution out there. The next part of it would be the tortilla opportunity, which is actually just as quickly. It would be the same as the frozen items, because there is equipment already that has very large capacity that we could be entering that opportunity of plant-based tortillas into the market pretty quickly. And then the third part of it is the snack concept that we're looking more towards fourth quarter, or actually even first quarter next year. And that is an additional whole nother potential revenue stream of sales for Tattooed Chef products. So there's 3 different areas of potential revenue growth within this, and that's why we're so excited about this opportunity, because of the diversification, not only in extending our frozen categories, but also now getting into ambient and into snacks. As far as the second part of your question on the tortillas, so immediately we want to be utilizing our grain-free concepts of plant-based tortillas right out of the gate with our frozen line. So it would be very unique to the market. And so besides us selling a plant-based alternative tortilla as a commodity, which per se is a commodity, although there's very limited of that product in the market today, we would take advantage of that same opportunity for those tortillas to be able to utilize it in the existing products that are created out there, but how Sarah always calls it, nostalgic innovation. So it just lines up perfect for what Tattooed Chef is and the opportunity.
Okay, that's really helpful. And then different topic for the next question. So the branded sales in the quarter jumped quite a bit from where you ended last year. And I was hoping you could sort of help bridge, I think it was a $13 million improvement in this year's first quarter. So if you could sort of break it down between your biggest club customers, between new grocers, between mass, could you help us understand where that jump came from?
So it's still driven by our club successes. it's been very minimal still on the opportunity of conventional retail, except Target. We started to pick up some of those sales in the first quarter, but it was minimal, and that's why everybody always says about the question will come up about well, what's up with guidance? Why aren't you increasing guidance? It's because is that you have to by the time that you get things approved and they get on shelf and they get distributed to Target, 1,800 stores or whatever store counts that you're dealing with. So before you get a full year's worth of those sales, it takes time to really start hitting that number. So this first quarter, except for maybe a little bit of a the Target business that was really so exciting, has really been still driven by our basic accounts of club and some Walmart business.
Okay. Helpful. And then last question for me is just about gross margin. So maybe this is for Stephanie, but it's such a volatile margin, just jumps around quarter to quarter. Is your gross margin gonna be more consistent this year, or can you help at all there?
Yes, gross profit margin will start to stabilize. It is a little high for Q1, but as we start to flow into Q2, Q3, Q4, it will be within guidance of 20 to 25%. Even with the acquisition of Foods of New Mexico, we will continue to see that across the board. There are some changes within Foods of New Mexico that we will make within their product line, since they are really a co-packer. And as we sell Tattooed Chef out of there, we expect everything to fall in line with our current guidance.
Okay, thank you.
Thank you.
Thank you, George.
The next question comes from Rob Dickerson of Jefferies. Please go ahead.
Great. Thank you so much. Couple questions. So I guess for the team, you kind of went through a number of the retailers. Sounds like you may be getting some distribution Q2 into Q3. But you said it kind of quickly, and as I was trying to write it down, I kind of missed it. Could you maybe just kind of go through, how that works? I know maybe even Q4 and Q1, right? There were some products you said you had like a lot of retail or a lot of grocers, for trial. So what you're saying today, it sounds like maybe you're past some of that trial phase, and then it sounds like maybe you're getting some distribution. And it sounds like part of that, some of that starts Q2 and then flows into Q3. So maybe you just spend like a couple of minutes just kind of walking through those retailers again. Obviously, just because it's such a big piece to your plan. Thanks.
Hey Rob, this is Matt. So obviously, the build is taking place as we're following the category reset cycle, and so what we like to share, because there's still a lot of moving parts on the retailer side as they're coming out of COVID in terms of actually when they're actually getting back into this process of doing full category reviews. And so what we like to show is kind of where we're seeing traction and where we're getting commitments, quarter by quarter. So clearly the first big win that we had in Q1 was Target, right? And so, we came out of the gate with 6 new SKUs of entree bowls with Target. We actually did an emergency revision, and that was because there was another supplier that they were doing business with that had some, some hanging on of COVID-related issues in terms of production. And so we actually accelerated our launch with them that was initially going to take place in May into March. And so that pulled forward that launch. And so, that was really the first big hit that we had. We took on, one of the other regional grocers, Stop and Shop in the Northeast with a couple SKUs. And so we're really doing two things. We're obviously gaining new customers. And so we have a list of those that we've kind of shared, and I'll walk you through more of those. But then it's not only once we gain a customer, once we're gaining the customers, we're able to go back and resell or sell into other categories that maybe that were not being reviewed when we started. And so as an example with Target, they saw the success of the brand with the entree bowls. That now is leading into kind of them launching this line of family meal products as well. And so not only is this an ACV kind of gain for us, but it also becomes a strategy around building distribution points through added SKUs. And so what you're seeing in our build is not just new retailers coming on, it's existing retailers adding more SKUs because of the success of the brand and how the brand is performing. So, that's kind of what you're starting to see as we shared with what we have in Q2. We're seeing retailers coming on like Jewel. We mentioned obviously Meijer. We've got Smart and Final coming on. Whole Foods we communicated is obviously hitting. And so, we're seeing that flow through. And then as the reset cycles take place, what we're sharing with you is, significant new gains that we're getting in specific categories, but we know that that's going to lead to future gains as well in other categories additionally too. So that's how it plays out.
I'd just like to add, Rob, that there has been no product that was launched in the first quarter that has been discontinued. The product isn't even getting started yet on these shelves. So it is, and with little information that we have already, as Matt mentioned, there's a real buzz and excitement that's happening with the brand. And obviously we have real numbers and data with Target that was really just blew everybody out of the water. So we're very excited about the success of what's happening with our product in conventional retail as quick as it is.
Okay, cool, good enough. And so then I guess kind of like to your comment earlier, Sam, and people ask like, well, what's in the guide, what's not in the guide. I mean, I guess what's kind of being communicated is if there's a reiteration of the guide this year, right, on the base, the 222, and then I guess like we should be thinking that there would be potential upside to that guide, right, depending on maybe when some of these new business wins occur. I'm just trying to kind of, pick through the timing of how
I understand, Rob. I do.
Yeah, that's all.
I do understand. And again, we had, it was really a function of that, when we came out with our guidance, it was really based on our assumption that because of the momentum and success that we had and these preliminary confirmations that we were verbally getting, but still by the time these items, get distributed nationally and they get the momentum behind them, it really would take, you really will take some time. So maybe later on this year, we'll have a better snapshot of just how the distribution is going to where we could revisit it. But again, we'd like to stick with the guidance that we have.
Okay, yeah, I think that clarifies it. Because people will ask, right? It's just a matter of,
sure.
Right, that's not even a question. They're getting new business. Why is the revenue staying the same? But it's essentially like you have your own internal projections. You're comfortable with those relative to the guide. And then, hey, like other stuff and sets hit in Q4, then it hits in Q4, but it got bumped to Q1. And, okay, I get it.
Yeah.
And then I had, the other question is just kind of on the EBITDA line, it's more mechanical, is, there's a loss in Q1, really driven by those SG&A expenses. Sounds like, gross margin might not be as high, but still high. Not as high as Q1, but still high, on a year-over-year basis you go through the year. EBITDA has to improve sequentially off of Q1. So I guess kind of the core question is, though, like, do those SG&A expenses kind of essentially stay the same? So maybe part of just that sequential improvement in EBITDA is really being driven by revenue. If that makes sense.
Yes. So let me answer that, Rob. So when we look at the EBITDA and the adjusted EBITDA, more importantly, and the operating expenses, I think it's important for us to note that there were some items in that adjusted EBITDA that are not recurring. and won't happen every quarter, but we did accelerate some things over the timeline into first quarter to take advantage of some promotional opportunities that we felt were important to help build the Tattoo Chef brand with new and existing customers. And those won't exist every quarter. They were planned throughout the year. Some of those expenses just hit in first quarter, so you will not see operational costs grow with revenue. Operational costs kind of are where they're at right now. And so you'll see some consistency within those as we digest Foods in New Mexico. We know where adjusted EBITDA is going to land for the end of the year, but remember that we still need to get in there. We still need to look at cost segregation studies and things like that. So there's some depreciation, amortization, and those types of things, but those won't affect adjusted EBITDA.
Okay, cool. Makes sense. And then I guess lastly, I had somebody ask me, I thought, good question. That's my last question. Sam, I think you said on the call quickly, you said, kind of gives us, even more conviction and comfort in reaching, at least $300 million in revenue in 22. I know, I'm pretty sure you threw out a $300 million revenue number previously, but then, you've made an acquisition, which obviously helps that revenue number. I feel like it kind of half-assed. I've had two people actually ask me about that, but I feel like it kind of circles back to your prior comment around 21, right? Like you had your own internal projections for 21. You obviously then also had your own internal projections for 22, and as kind of maybe some of the business flows through where you're speaking with the grocers, you essentially just got to feel better about those internal projections. Does that kind of sound fair?
Absolutely. You nailed it. I mean, it's like to tie what you were saying in, it's like, it was always a function of like our facilities because, we're producing our products that we sell. And so we look at our production facilities and we say, hey, where are we? And, and so based on our assumptions, we came out with the 222. And then for us, and we know that for us to continue to grow, unless we became a marketing company, we would need to do M&A. And the beautiful thing about the Foods in New Mexico facility is that we didn't have to pay some crazy multiple because it was a branded product, because we have our brand. And so we get this incredible facility that is an existing facility that's operating with over 300 people, that has all the food, licenses and just raring to go, that now we could bring our brand, and we can now, exactly what I was trying to accomplish is to be able to increase our revenue, and the guidance that I suggested based on M&A, that is our model as a manufacturer, to be able to control our destiny. So it is exactly what you just said and what I was hoping to hit and get.
And Rob, if I could add, one of the things that I would also share is that this space, $1 billion in revenue for frozen food, Mexican food products, we know exactly where we can fit. And the thing that I think is great is that consumers are already gravitating towards, this kind of nostalgic innovation, comfort food that comes from the Mexican food category to the Tattooed Chef brand. I mean, the Tattooed Chef brand, some of our best-selling SKUs as we've launched in the market today are some of the SKUs that are Mexican-style products. I mean, the product that's flying off of the shelves at Target is our new burrito bowl that Sarah has created, which is phenomenal. And so people are now looking to us to bring great-tasting, creative, plant-based Mexican foods to the marketplace, and they'll be looking for us to kind of lead that charge. And so it's kind of that we've been testing it, and I think that we're comfortable with what's going on with that SKU, what's going on with Sam's, with the burrito blend, even our original enchilada bowl, that this is a place that people expect us to bring great-tasting products, and I think that is really exciting.
Sorry, and then if I can sneak one quick one in for Stephanie. just on cost inflation, I feel like I'm supposed to ask this because we ask this of every food company right now. It's just, you're in growth phase, right? There's obviously a lot of inflation, a lot of different commodities, freight, you name it. Is there anything that's sticking out to you, that could actually be just inflationary on the cost side, on the COGS side? I guess one, and then two is just as you do grow, right? It doesn't sound like there's any type of sourcing issue of certain products or ingredients. That's it. Thank you so much.
So, of course, we're seeing inflation. Everybody's seeing inflation. We would, it would be ridiculous for us to say that we're not. And on the cost of goods sold side, yes. The announcement for corn, we sell Mexican street corn. I understand why people might think that it could be a concern. We are contracted in with a year-long pricing. It has been confirmed. And so as long as the price of corn regulates at some point in time in the next 12 months, which I'm convinced that it will, then we would turn around and we would see, things come back in line before we were due to contract the next time. And that's some of the ways that we try to combat inflation in general when it comes to cost of goods sold. But on top of that, being vertically integrated helps us because we manage that cost within our manufacturing facility, not just for the raw materials. If we see an increase in raw materials and we're making strides when it comes to direct labor by the purchase of equipment and utilizing a lower cost for direct labor per cell unit, then we can absorb some of those costs and we have a little more control than if we were utilizing a co-manufacturer or a co-packer, because we would get their inflation costs within their raw materials, their labor challenges, and that would just flow up to ours. We are confident that if we continue to see inflation for cost of goods sold, that if we were to approach our customers later, closer to that 12-month mark, and inflation were still high, that we would be better received at that moment in time if there was a necessary price adjustment than we would be if we turned around tomorrow. And so we are bracing for the impact of that. We are monitoring it closely, and we're paying attention to our raw materials. We have not had any challenges in getting raw materials at this point in time. But we make sure that we diversify our suppliers and that we're tracking that and that we're ahead of the game on that. So it's very important to us as manufacturers to be able to control that ourselves. It's part of why we're so excited about New Mexico.
Got it. Awesome. Thank you so much.
Thank you.
Thank you.
This concludes the question and answer session. I would like to turn the conference back over to the management for closing remarks.
Thank you for joining us today. We're off to a strong start to 2021 and have an incredible opportunity to grow the Tattooed Chef brand. We have increased capacity and sales, expanded gross margins, and closed on a strategic acquisition. We have done everything we said we would, and we believe we're just getting started. I look forward to speaking to you again at several upcoming investor conferences and our second quarter earnings call in August. Have a great day.
This concludes today's conference call.
All right.
You may disconnect your lines. Thank you for participating.
Okay. So, guys, first off, I want to apologize for the little man coming in. He was meant to be in bed, but I think he said he had a bit of a nightmare or a bad dream. So that woke him up. So apologies for the interruption there. But yeah, that was a much more upbeat earnings call in comparison to Q4, the previous one that we had. I think there was a lot of notes. I was making notes. I see some of you in the comment section talking about I was playing Hangman. I was drawing pictures of dogs or dragons on that piece of paper. I was making notes. I mean, there was a lot of points that Sam hit on. Sarah, Stephanie came and saved the day with regards to the numbers. But I mean, some of the main points: extraordinary demand in Target. Extraordinary demand. Like, that's crazy. That is crazy. You know, he said, I think he made a statement that Target were not expecting that level of demand. And apparently it's up there with one of the most successful launches in Target's history. So that alone is just, I need to compute that. I need to be able to process that. But that was straight off the bat. That's how we started the earnings call. Extraordinary demand in Target. And you know what I was thinking? I was thinking that extraordinary demand is from shareholders. What do you guys reckon? It's from shareholders, because you're seeing all the pictures from shareholders posting their basket load of Tattooed Chef products, right? So extraordinary demand, I reckon, is extraordinary demand in Target that Sam mentioned. It's got to be shareholders. Do you get what I'm saying? It's got to be you lot going to Target and just loading the boats with Tattooed Chef products. But regardless, it's good to see. It's good to see. They mentioned that they have 10,000 stores by the end of year, which is, again, that's something really, really impressive. They made a lot of points. They made a point that Tattoo Chef will be an extra, will be a generational brand. Okay, I keep telling you guys, Tattoo Chef, that brand itself will last. It will stand the test of time. I really like the branding, and their goal is for that brand to be a generational brand. So think of it as, you'll be able to pass your shares on to your future generations. I love this company. It's in line with my Discord, which is called Generational Wealth Builders. So as well as that, we launched 42 branded new SKUs. 42 branded SKUs now is that what we have up to date. They mentioned they have 200. Sarah mentioned that they had 250 new ideas for innovation as a result of the acquisition. So you can imagine Sarah being the creative goat that she is. Just pretty much introducing this food service with the New Mexico acquisition. She said she's got about 250, new ideas, new innovations, and that's what we love to see. Her being the creative director, just buzzing with ideas. Just get them out, Sarah. Pause. I didn't mean that way. Sorry. Get the ideas out, Sarah. Get the ideas out. Okay. Get the ideas. I don't want to get in trouble. But yeah, so operating expenses, of course, went up. Again, that's to do with the acquisition, and that led to the net loss that we are seeing here. So the net loss, it's not that bad of a net loss either. Net loss of 7.9 million compared to net income in the prior year period. But remember, again, that was due to the increase in operational expenses from the acquisition and also from marketing. But again, this is something we should expect from a high growth company, and we are seeing that high growth from a fundamental point of view, which is incredible. And I think even from a financial point of view, we are seeing high growth. Okay, so revenue was up 59% year over year. Again, branded sales were smashing it, 105% growth in branded sales, absolutely smashing it. So from a fundamental point of view and from a financial point of view, we are growing exponentially, and this is what we want to see. This is exactly the kind of quarter that we needed. I think a lot of us have been buying the dips in the last quarter, myself especially. I know you guys have been buying the dips, but I think this quarter just gave me a lot more confidence. I'm very happy with my position size. But seeing this quarter, yeah, I'm happy. And again, if the prices get ridiculous, I think we will see the share price drop. I'll be honest, just because this is the current market we're in. We're in a bear market right now, especially for high growth stocks. But I'm good. I'm good for now. If the share price drops to about $14, then I'll probably begin to add again. But this quarter gave me a whole ton of confidence. So yeah, and then some of the questions as well was about the New Mexico acquisition. How quickly will it be operational? And I think Sam mentioned towards the end of year, we should be fully operational with the New Mexico acquisition, which is very good to see. And Sam did mention that will bring 3 different areas of revenue growth. Imagine 3 additional areas of revenue growth from the food service. I'm so excited. I can't wait to see this incorporated. Also, Sam is standing by his guidance for 2022. I think it was 300 million plus. And again, I think he's definitely being conservative from the way he's explaining he wants to make sure sales are confirmed, orders are confirmed before raising guidance. And that, I love that. I'm sorry, I absolutely love that, because sometimes you get CEOs or management teams that they raise guidance just to influence the share price, but then when they report the earnings, they're below guidance. And I love the fact that Sam is being conservative. He's sticking with his guns, and he's saying, look, once the sales are confirmed, once the revenue has been finalized and orders and the SKUs, they mentioned that the likes of Targets are increasing their SKUs, because again, you get a lot of a letter of intents with regards to wanting to increase the SKUs, but it might not materialize. So the way Sam justified it, someone said, I'm happy with my size. You guys are giving me jokes in the comment section. What was I saying? Yeah, so he wants to be certain, and I love that. I can't argue with that at all. The burrito blend and the enchilada bowls apparently are absolutely smashing it. That's probably our best sellers, according to the other guy that came in. I don't really know his name. I know Stephanie was in the call. I know Sarah was in the call. Sam was in the call. But there was another gentleman that was in the call. I'm not entirely sure who he was, but I liked him. I don't know who he was, but I liked him. I liked the way he sounded. He came in with a lot of confidence, a lot of enthusiasm, and I liked his contribution in the earnings call. Now, the question on inflation came up, but expertly put, Sarah said being vertically integrated helps us to keep it under control, but she did confirm they are seeing inflation, especially I believe she mentioned corn. Was it corn? Yeah, let me check my notes. Yeah, with corn prices, of course, with the burritos and stuff like that. So they are seeing that inflation, but being vertically integrated, they have it under control. And she mentioned that they already have pricing contracts, year-long pricing contracts, which is helpful. So the exponential increase in corn prices or whatnot, they're not seeing the impact yet. And hopefully within a year's time, we'll start to see the prices of commodities going down. And that's really it. So I think this earnings call for me was extremely positive. Let's see what you guys are talking about in the chat. You guys are giving me jokes in the chat. Hey, Landon, I had to apologize there with regards to Sarah. Okay, so guys, another thing as well. So I'm going to reach out to the investor relations team. I'm going to get one of them on my channel. They did say after earnings, they'll be happy to jump on my channel. So I'm going to create a post in the community forum, and I want you guys to just spam that post with your questions with regards to what you want me to ask the member, whoever comes on. I don't know whether it's going to be Sam. It'll be great if it was Sam that came on the channel. It'll be even better if it was Sarah, because I've been sliding in her DMs for a while and she hasn't responded to me. Or Stephanie, whoever comes on the channel, it'll be great to have them on, but I need your help. Okay, so I'll put the post out later tonight in the community forum and just spam it with your questions. But yeah, let me just see what you guys are saying in the chat before we wrap up the night. And it's gonna put my son to bed. Okay. So appreciate you, XP. I see you in the comments, my brother. Savvy, I appreciate you, Savvy. Can someone share the link to the Discord? Throw in, it's in if you go on any of my previous videos, you'll see it in the description box. Dude, get Sam on the show. Let's start a petition. I would love to see Sam on the show. On the channel, it'll be great to have him on. I like the channel. Thank you, Darius. XP, love you, my brother. Shout out to my man Rudy. Yep. Okay. Bets. Yep. I'm seeing rocket emojis. What is this? So in terms of the after hours, we're not really saying much. I mean, we're down, man. It's holding up. Okay, so it's holding up. I honestly, as soon as I saw the reports that we missed, as soon as I saw this notification, I was like, oh, here we go. It's about to go on sale, but it's holding up. It's holding up really, really well. Okay, so CBYB said, will I be adding more shares? So no. The answer is no. Right now, I've got my position built to a point. It weighs about, I checked it this morning, it weighs about 32% of my portfolio. I mean, when we dropped to $15, I was a madman. I was a madman. I was just loading. So right now, it's a hold for me personally. It's a hold. I'm really excited about Q1, but as much as I'm excited, I need to keep my portfolio under control. So I will not be adding, even though I want to. But I will say this, CVYB, if Tattooed Chef drops into, maybe 14 or 13, I'm going to have to come out of retirement. Do you know what I mean? I'm going to have to come out of retirement. So, okay. So let's see what you guys are saying. I'm seeing rocket emojis. It's been a while that I've seen rocket emojis in relation to stocks. Rocket emojis have been about all these meme coins recently. So it's good to see rocket emojis, even though the, share price is down in after hours. XP, I'm sliding in her DMs. You know how we do, bro. You know how we do. Sam is not good without a text in front of him. Yeah. Oh, yeah. So Peaceful Sunsets is referring to, we were doing good in after hours. I think we were up like 1%, 1.5%. And then Sam started stuttering. And then we just saw the share price just So he's stuttering on the I think, yeah, so it was a Rough Capital analyst that asked the question, and then Sam started stuttering, and then we just went red. It was like red, like so. And then I believe Stephanie came in and kind of like settled the nerves, but it was really, really good to see. Man, what are your thoughts on gross profits minus 2% compared to? Yeah, so that, again, bro, that's on the cost. I mean, even our cash position was down. Our cash is now 185 million. Again, it's all to do with that acquisition. But I think long term, remember, we're long term investors here. We've got to focus on the growth that we're seeing from a fundamental point of view from the new acquisition. And I think in the long term, the gross profits will see a much better increase. But operational expenses will suffer. So you need to be prepared for that. Can you touch on what they said about margin stability came in during that? And I missed that part. So I need to double check that, Shakespeare. I need to double check that. I'm not sure if that was the part where my son came in, but I did get distracted. But again, I apologize for that. Okay, I'm late. Don't worry, Vendetta. You didn't miss much. It was a great earnings call. It was a much better earnings call in comparison to Q4. And I will be doing a summary. Okay, so I'm going to take some time to go through all of the highlights, the fundamentals. I'm going to rewatch the earnings call, and I'm going to come with a full in-depth recap for you, hopefully by tomorrow. Okay, latest Friday. Yeah, joking. Okay, yeah. So yeah, Navid. So that's my boy Musa. Is in the Discord. He knows I've been buying the dips. I've been buying Tattooed Chef dips. Like almost every alert, bought more. So. I'm gonna have to rewatch this. Yes, brother. Same here. I'm gonna have to rewatch this. I feel a lot more pessimistic about the share price than everyone else. Yeah, I mean, there's a lot of pessimism in the market in general, to be fair, especially targeted at high growth stocks. There's a lot of pessimism. I mean, look at Palantir. Palantir was a perfect example. So Palantir, we had great earnings. The share price, I think it finished up 9% on the day. And then by today, let's have a look at where we are. Palantir, how did we perform? That, so we pretty much gave back everything, all of the gains from yesterday, and we're down in pre-market as well. So you tell me what changed between earnings from yesterday, where there was so much optimism, to where the treasury yield increased and we saw inflation reports was much higher in April than expected. Then all of a sudden, boom, Palantir is down 6% the following day due to investor pessimism. It's just the market we're in. It's just the market we're in. So let's have a look, see what you guys are saying. I think only Stephanie should speak during these calls. I know, but remember, she's the CFO, so it will look suspect if Sam isn't speaking, the CEO. So yes, so Nielsen, I am going to double check the stock-based compensation. That will be in my full review. And yes, you'll have the answer there. I got here, give me the lowdown. Okay, so I'm going to give you the lowdown in another video, but thank you all so much for tuning in. My closing remarks is I am very optimistic. I loved Q1. It was so much better than Q4. Extraordinary growth in the likes of Targets. Retailers are ordering more SKUs, plus. So guys, I'm going to get some rest. I'm going to watch this all over again. Thank you so much for tuning in again. I appreciate every single one of you. It's great because if not, I'll be chatting to myself. So every single one of you that turned up, thank you for smashing the like button. I appreciate every single one of you. You guys are amazing. We've got a great tattoo chef community that we're building here. And, you know, in the long term, let's grow our wealth together. All right. So take care, guys. Have a great night.